Of course, Angel Gurria would say that, right? He wants things to stay calm. But what is the danger that this picks up again? We're seeing a moment of relative calm now. But if there's another announcement, will the bond market go haywire again?
So I think it could do. I think it seems very likely we're going to have a new election in Italy, whether it happens in July or September. I think populists will probably do quite well in the next election. So I think the next big development might be what kind of pre-election coalitions are formed, whether the Lega decides to partner up with the five-star movement. And I think there are big questions about that because over the course of these negotiations, relations between Salvini and Di Maio, I think, have degraded quite a bit. Or maybe the Lega will partner with Forza Italia, Berlusconi's party. And ironically, Berlusconi this time around will be kind of the moderating factor on that kind of coalition. And so I think investors will react to that. A Lega five-star pre-election coalition would be a bad thing for Italy's fiscal dynamic, certainly, and its debt sustainability. Lega, Forza Italia would be probably positive for the markets.
So what is the ECB's role in all of this, Megan? I mean, the ECB can't save Western liberal democracy. I mean, if populism is gaining a foothold and there are going to be these crises that pop up country after country, what can the ECB do?
Well, in a way, the ECB is the only actor that is actually poised to act. You'll remember back in 2011, the ECB sent a letter to Rome saying essentially, get your fiscal house in order. And Berlusconi had to step down a couple days later. So the ECB essentially ousted him. And shortly off the back of that, of course, Berlin gave the ECB a nod to go ahead and give the whatever it takes speech and start firing up the printing presses for QE. It was only because Berlin was convinced Italy was fiscally responsible that the ECB could go ahead and do that. This time around, the ECB can't really replay that performance. If the ECB were to go ahead and undermine politics in Italy now, it would only embolden the populists further. It would only increase their support in the next election. So the ECB's hands are kind of tied. Constancio came out and said, Italy would be right to remember the rules and it should reread them. I think that suggests that the ECB is just going to stand by and let the markets try to impose some kind of discipline on Italian politicians.
Megan, that's the ECB. What about Berlin, Brussels? What can the EU, the heart of the EU, do to maybe take some of the anti-EU wind out of the populist sails?
So in terms of direct responses, again, Berlin and Brussels, their hands are pretty tied because if they go ahead and speak out against any internal politicians in Italy, populists will go ahead and say this is, the stooges in Berlin are trying to control our domestic politics. The one thing that the EU really can do, though, is to throw Italy a bone on the migration crisis. So it could come up with some kind of migration policy at the upcoming EU summit at the end of June. Unfortunately, though, the EU is so far away from coming up with a migration policy. They won't have anything really that they can unveil there, but they might at least show some solidarity, provide some funding for Italy, which has an incredibly long coast and is really has the brunt of immigrants coming across from North Africa. So the rest of Europe could show some solidarity there, and that would take a bit of wind out of the populist sails, particularly the Lega, which has really been running on an anti-immigrant, nationalist, sort of racist platform. So that could at least do something.
Does this blow up to be a major European crisis, Megan? I mean, are we looking at redenomination risk here?
So I think we could be looking at redenomination risk, and that's why we saw the market response that we did yesterday. I mean, there are three real choices for Italy if they do have a populist government. One is that they just fall in line quickly with what Berlin and Frankfurt and Brussels are demanding. The second is that they fall in line slowly. The third is that a populist government decides, we don't really want to be part of this Euro thing anyhow, and they essentially take Italy off an economic cliff by suggesting that Italy leave the Euro. All of those options are set for things to get worse before they get better, so I do think there is market turmoil to come.
Megan, what about the US? I mean, Italy, 11% unemployment, let's not forget, it's massive. But in the US, we're at a three-handle now, and things seem to be going swimmingly well. And yet there's one or two things out there that are giving some economists a lot of pause.
Yeah, so I think some economists think, a traditional business cycle lasts roughly 10 years, so we're kind of due for a recession. And so I think there are concerns that maybe the economy is overheating given how much stimulus we have coming down the line this late in the business cycle. I'm not that worried about that. I think the business cycle this time around is much longer than it has been in the past. So I don't see any signs of a late cycle surge in inflation or overheating. I do think that debt is a concern, though, and particularly non-financial corporate debt. So if you look at the figures in aggregate in the U.S., we've been on a debt issuing bonanza for the past year. But in aggregate, the figures look fine. Corporate balance sheets look okay. But if you strip out all the cash-rich companies in tech and pharma, the remainder look pretty over-leveraged in a rate hiking cycle. So that could be a problem.